Well, I'm here with Cell C's Chief Financial Officer, Robert Pasley. Robert, we're seeing this incredible price war that's going on in the mobile industry at the moment. Do you think that this price war is good for consumers in the long term, or do you think it has the potential of harming the industry?
I wouldn't yet describe it as a price war, though clearly we have seen substantial price movement over the last few months in particular. But I think ultimately this is about the cost to communicate, and it's about bringing down the cost to communicate in a sustainable manner. And I have no doubt that our competitors have done their sums and they're confident that they can build a sustainable business regardless of where the MTRs go at the pricing that they put into the market. I believe they could equally well have done that 3, 4, 5 years ago, and it's obviously unfortunate that it's taken this long to get to the point where we are now. But having said that, I see this as being sustainable pricing, and certainly the pricing that we're putting into the market, we are confident that with adequate scale, we will be able to deliver a sustainable future for our shareholders and for our customers as well.
At what point does this become damaging for the industry? I mean, what sort of price levels will we be looking at when we're actually causing harm to the industry in the long term?
I don't think you can say that, because I think a lot of these pricing discussions are as much about the way that these products and services are brought to the market. They're as much about that as they are about the headline tariffs. So there are many different ways of packaging your products and services, and it's often actually quite difficult to get to the headline pricing. So if you look at the offers that our competitors have had historically in the market, I mean, zone type products, and you look at products that we have currently in the market, such as Supercharge, it's very difficult to see clearly from that what the real price points are for the different components of those services. So I don't think you can pin a particular number on, sort of say below this level it becomes damaging. I think the only question is whether or not the players in the market have the deep pockets to continue to invest in infrastructure, and I think we're clear that we have funding from our shareholders and from banks who believe in our business plan that will enable us to deliver a good network over the next 3 to 5 years, and I'm pretty sure that our competitors are in a similar position.
At what point, though, do your shareholders start to expect a return? I mean, as far as I know, Cell C has never made a net profit. At what point do the shareholders say, well, we've been investing billions of rand into this business, we continue to invest equity into this business? At what point do they say, well, we need to make a profit now, or is this going to be loss-making for the foreseeable future?
Clearly not. I mean, you'd obviously have to ask that question to the shareholders, really. But I think that really since Alan took the reins at Cell C back in April 2012, we've seen a fundamental shift in the approach of Cell C, and basically we are looking to grow to a sustainable level of scale, and I think it's fair to say that as a national mobile operator competing at all levels, to have plus minus 10% revenue market share, which is kind of where Cell C had peaked historically, is simply not sustainable. So we have a plan to acquire sustainable market share. It doesn't mean we have to be market leader or even number 2, though obviously we would like to get to those kind of levels.
Sure.
But we have to get to a sustainable level of scale, and that's what we are going to do, and we're pretty confident we can do it in a manner that will deliver profits to our shareholders. But it's a long-term plan, and it's a 3 to 5 year plan.
Right. Just lastly, there's been a lot of speculation about the state of Cell C's balance sheet. Can you talk a little bit about what your gearing has done over the last few years? Perhaps, I don't know to what extent you can disclose numbers, perhaps the debt numbers, actually the actual debt numbers sitting on your balance sheet. And can you just talk perhaps a little bit about how Cell C is working to address that debt level? And one analyst has suggested that you have a large debt covenant coming due in mid-2015 to the tune of around 1.6 billion rand. Can you talk to that as well?
I don't really want to discuss the gearing in detail,
Sure.
except to say that we do have a business plan which obviously factors in all of our debt, all of our equity, all of our future providers of finance, and we're confident that we can deliver a plan that is consistent with that satisfies all of the providers of debt, including bondholders, including banks, and including our equity holders. And I think the fact that the shareholders have put such significant equity into the business, and that the banks are currently backing the business in terms of supporting the infrastructure that we're putting into the company, indicates that there's a good degree of confidence amongst our providers of both debt and equity. So we really don't have any serious concerns about debt repayment, if that's what you're asking.
Sure. Great. Thank you for your time.
Pleasure. Thank you.